Arch Capital, the Bermudan reinsurer, reported a fourth quarter net loss of a staggering $142.9 million, down from a net gain of $234 million in the same period of 2007. Arch's full-year net income result more than halved to $265.1 million, down from $832 million the year before. The group reported after-tax operating income of $85.9 million, in the range that Arch previously stated. It expects to report after-tax operating income available for common shares in the range of $75 to $90 million for the 2008 fourth quarter. The group that losses were reflective of a $155 million hike in loss estimates from Hurricane Ike, which devastated the US Gulf Coast last year. The updated loss estimate is based on increased estimates of industry-insured losses of $18 to $21 billion, as well as additional information from clients reflecting larger losses than initial estimates, Arch have said. Over in Australia, Insurance Australia Group, IAG, will tap shareholders for $550 million, that's Australian dollars, with the underwriting giant finally bowing to the hits to its balance sheet ranging from bushfires to floods and to the global financial meltdown. IAG, which is part of way through the wide-ranging restructure after spurning a takeover offer from QBE Insurance, warned it was barely profitable during the first half of its business year, with large payouts and losses on its investment portfolio pulling down earnings. IAG Chief Executive Michael Wilkins said the recent massive fires and floods were a significant event for the nation's insurance industry, with premium rates likely to rise with reassessed across the sector. Selling insurance under brands such as NRMA and RACV, IAG has so far received more than 2,600 claims relating to the Victorian bushfires. However, its exposure is likely to be capped at 126 million Australian dollars, with reinsurance agreements covering any additional payouts. Both IAG and key rival Suncorp have said it is too early to offer estimates on the likely claims bill from the bushfires, although analysts believed insured losses may exceed 500 million Australian dollars. The Cigna Corporation will stop using a faulty database to calculate reimbursement rates for patients who see doctors outside of their insurance networks. It will contribute $10 million to a new independent payment database, the New York Attorney General Andrew Cuomo said on Tuesday. The change is intended to eliminate a conflict of interest that unfairly drove up the costs for people who went to see doctors outside of their network. A class action law against Cigna has not been settled, making it unclear whether it will reimburse customers who overpaid in the past. Cigna, based in Philadelphia, one of the nation's 10th largest insurers. The Cigna settlement came on the same day that Mr. Cuomo announced plans to sue Excellus Health Plan of Rochester on charges of defrauding customers by manipulating rates. Cigna joins several other major insurers that have reached agreements with Mr. Cuomo in the nationwide push to reform how healthcare reimbursement rates were set. Mr. Cuomo said the use of a database operated by Ingenix, a unit of the United Health Group, had helped to set rates low so insurers could underpay for out-of-network services. The investigation by the Attorney General's office revealed that the database had intentionally skewed rates downwards. Chairman and CEO Jeffrey Immelt won't get a bonus in 2008, and he is declining the entire $11.7 million earned under his long-term performance award, the industrial bellwether said in a filing to the SEC. GE's Management Development and Compensation Committee accepted Mr. Immelt's proposal as appropriate, recognizing that the company delivered a strong operational performance in 2008. This performance was not reflected in GE's stock price. Ironshore Inc. is to grow further into AIG territory with an exclusive MGU, that's Managing General Underwriter, arrangement from its new environmental unit with Berkshire Hathaway subsidiary National Fire and Marine. The expansive Bermudan said its Ironshore environmental operation, launched last month with the former heads of AIG Environmental at the helm, had also placed a reinsurance treaty led by another Berkshire Hathaway company, National Indemnity, so as it uses the investment giant's balance sheet to build its business. The MGU arrangement will see Ironshore Environmental write long-term risks for more than 5 years on National Fire and Marine's AM Best A++ rated paper. And in our final story today, Atrium Underwriting Group has opened a Singapore office to develop regional business on behalf of Atrium Syndicate 609. So that's not all bad news. Atrium Singapore is being established using the Lloyd's Asia platform and will write a portfolio of energy and marine, aviation and non-marine short-tail business. The insurer said approval has already been received from the Monetary Authority of Singapore. Richard Young, a marine underwriter at Atrium for the past 10 years, has been appointed CEO and underwriter of Atrium Insurance Agency Asia. The company said that the Singapore office will adopt the one core underwriting strategy of the London syndicate. Similarly, risk management and infrastructure will mirror those of the Atrium Group. The emphasis will be on sourcing business from the local market, which is unlikely to reach the London market, it said. Richard Harries, underwriter of Syndicate 609, said, and quote, "The syndicate has already a large number of long-standing relationships in Asia and a track record of profitable underwriting from the region. In recent years, Lloyd's Asia has clearly developed into a true marketplace, so it provides a good opportunity to develop our client base further. In Richard, we have appointed someone who is fully empowered to underwrite on behalf of the syndicate and whose expertise and experience will add much to the Lloyd's platform in Singapore." Well, that's the news for today. We'll be back at our usual broadcast time tomorrow. Until then, thank you for watching and have a good day.